Good morning, folks. This is Naeem Azam, Chief Market Analyst at AvaTrade, and welcome to our daily technical analysis video. And happy Friday to you, folks. And today is the US non-farm payroll day, folks, and that means wild, gigantic, enormous moves in the markets. And by markets, what I mean by that is equity markets, forex market, and of course commodities as well. But in this particular video, we will focus on gold prices. So let's have a more deeper conversation on that. As always, it is important for us to go through this disclaimer and respondings. Anything which will be discussed in this video cannot be perceived as advice. If you are seeking for one, please do consider consulting with your own financial brokers. Now, as always, I'm going to bring out the MT4 platform. As you can see, this is the daily chart for gold prices. So from the daily chart, what becomes quite clear, let me get rid of MACD because I think we will skip the MACD part for this particular conversation, and we will focus on more important aspects such as your RSI, the relative strength index, where if the index falls near the level of 30, that means prices are oversold, and if it reaches at near the level of 70, meaning the prices are overbought. And on the chart, we have three different moving averages. In green, we have your 200-day simple moving average. Then in pink, 50-day simple moving average. And in yellow, 100-day simple moving average. Now, there is no doubt that the price is trading below these moving averages, which is very much a clear confirmation that bulls are literally in no longer control of the price. In addition to that, for the past 3 days, we have also seen a massive sell-off, especially yesterday's sell-off was the biggest one-day sell-off since early January this year. Now, of course, after these 3 days of sell-off, a little bit of a bounce is very normal for the markets, and that is what we are really experiencing. However, what we also need to keep an eye on is that the price has broken previous support level, which was just above that 1900 price, and then the near-term support is between 1756 and 1777, and that is a price level which the price hasn't touched. But at 1:30 p.m. when the US non-farm payroll data will be released, we are likely to retest this level or even perhaps break below this one, moving towards early 1735s. So depending on the number, how good or bad the US NFP number will be, that is very much going to determine what is going to happen in terms of gold prices. But there is no doubt that the stage is really set for a major disappointment. The reason for that I'm saying is because everyone is expecting a very strong reading for the US NFP, and the biggest surprise happened when no one is expecting, when someone is when market is not expecting that can happen, and that means that in today's US NFP term we can get a weaker reading. Of course, if we do get a weaker reading, this gold price is really going to shoot to the upside. So under those circumstances, what you could do is you could put your stop losses below the lows of yesterday and let this price run. Let this price move to the upside. However, if the number does come as the market is expecting, then you may want to put your stop loss on the highs of today, which is where the prices are trading now, or just above 1900, and let this price continue its downward journey. But be ready to take some profit as the price enters this support area, because this is where we are likely to see a bounce back to the upside, and that bounce is going to be encouraged by the fact that the RSI is trading very close to its 30-day simple moving average. So again, to summarize, if the US NFP comes week, then you wanted to put your stop losses below the lows of this particular candle and let this trade work in your favor, because the move is likely to the upside. However, if the number it does come as the market is expecting or even better, then this gold price is likely to move further to the downside, and it is likely to dive into this area of support. Now, in terms of a resistance, we are really looking at the first resistance level at 1876. However, given the intensive sell-off that we have seen, I do believe that we can adjust the resistance at 1862 as our first area of resistance. And after that, there's this cluster of three different moving averages, and price is going to struggle to move above them. But once once it will clear that, then we will very much be focused on this resistance zone. Let me just have a quick look on the weekly time frame. The weekly time frame also confirms that there is a stronger possibility of a double bottom forming. Maybe the first bottom over here, the second one over here, but overall the price is very much trading near its 50-week moving average. All right, folks, that's all for now. I'll see you guys next time.